RC Venkatesh, CEO of Dish TV, joins us. Mr. Venkatesh, good morning and thank you for joining us. I'm sure it's a great feeling when across the board brokerages are giving a thumbs up to your company.
Yes, certainly. I think it's a sort of a vindication of all the work that we have put in and also the outlook for the sector as a whole.
So what you've reported for the quarter gone by, which is Q4, a big turnaround, massive margin expansion, good EBITDA growth as well. Was Q4 a one-off or the turnaround is real and those growth numbers are here to stay?
Well, if you look at the way the numbers have been progressing over the last several quarters, you would see that we've been able to improve the metrics literally on a quarter-on-quarter basis. You must appreciate that this is a long cycle business. It's fairly capital intensive, so we need to build up to a certain scale when the operating leverage kicks in. And I think we've reached that sort of inflection point. I had indicated that even the previous quarter as well as in the quarter previous the conference call, that this is a business which takes a bit of time to reach that critical mass. We've got that mass and momentum. I certainly think it's a reasonable expectation that we will see continued improvement in the matrices going forward.
Walk us through what are the long-term expansion plans then for the company? After Zing, what's next? What's the company's strategy like?
Well, the Zing story has just started. As you know, the product was designed for the phase 3 and phase 4 digitization, which is the next big expansion opportunity for DTH especially. We have close to about 90 million analog homes coming up for digitization in phase 3 and phase 4. Zing was a product which was specifically designed to cater to the needs of those markets. The product's been in the market for barely a year now. We will be expanding the reach of Zing geographically over the months so that by the time the phase 3 deadline kicks in, we are fully placed to take advantage of that shift in the phase 3 and phase 4 areas. That apart, the company is also focusing on increasing its penetration of high definition. We've seen a very strong uptake of high definition, especially in the phase 1 and phase 2 areas. Especially you're seeing that DTH offerings of HD, of all the DTH companies, are far superior to what the cable companies have to offer. Because most of the cable companies haven't even sorted out their last mile billing issues. Therefore, we are seeing a dual trend where in the urban markets you're seeing more and more consumers opting for high definition, and in the rural markets where the transition is from analog, it's coming straight through to DTH. So I think this is going to be very positive for the DTH industry as a whole, and I would expect that you could see this as a fairly sustained growth story for at least the next few years till the country is fully digitized.
Mr. Venkatesh, what about the industry? You know, when we met a few quarters ago, you were mentioning about how, as you mentioned in your opening remarks as well, that while DTH may take time to get started, once the kickstart comes in, it can actually go a long way. Do you see this as the first of the many good quarters to come in? And would this be the start of an EBITDA uptick trip coming up for companies like yours? Not just Dish, maybe others too, but maybe you could speak only about Dish.
No, absolutely. I think the overall industry has also invested a fair amount of time and effort to get to a scale where the benefits of the scale and the operating leverage is bound to kick in. And therefore, it's not just for Dish. I'm sure there are other companies also who are reporting in the public space, and you would see that their metrics are also improving, literally on a quarter-by-quarter basis. So this is certainly, I think India is going to be predominantly a DTH play, as opposed to what many people, I'm talking about the pay television space, many people had this debate of whether it's going to be cable which will lead the way or DTH, and I think by now we've clearly proven in terms of execution the DTH companies have done a far better job than the cable ecosystem. As you look at phase 3 and phase 4, you're seeing a situation where the cable companies haven't yet even resolved the issues of phase 1 and phase 2 and established a basic B2C model. They even haven't signed the interconnect agreements with the broadcasters for phase 3 and phase 4, let alone plan their investments. So certainly I think the DTH story is something which is resonating well for the Indian market.
Mr. Venkatesh, we've seen very healthy subscriber additions. What's the kind of ARPU addition that we can expect from you?
Well, we've guided for about a 6 to 7% organic increase in ARPUs. Of course, we get some additional momentum coming from digitization being implemented more aggressively by the government, then we could see some further uptick possibly. But otherwise, we've guided for a 6 to 7% increase in ARPU. We grew ARPUs about 8% last year, largely through price increases and improvement in pack mixes. So we're seeing that coming through, especially with increased contribution of HD. However, to some extent, the phase 3 and phase 4 markets tend to be lower ARPU. Therefore, they tend to sort of counterbalance the increase of the HD overall.
Mr. Venkatesh, just last week, Reliance in its AGM is saying that they now want to enter into the digital cable distributions segment. Now, just historically going by Reliance entering any space, and we saw that play out with telecom as well, as to how just the Reliance Jio announcement itself made the other telecom incumbents a little jittery. With such a big player entering into the market, how do you plan to tackle competition, if at all those plans of Reliance's materialize?
Well, first of all, we are not privy to the detailed plans in terms of what mode or what methodology they are planning. As we will see those plans, then we will be in a position to comment. If we are talking about linear television through wireless broadband or LTE, I don't think that is a model which makes much of economic sense because just the cost of the bandwidth which you trade off for the TV subscription charges, which are barely about 250 to 300 rupees a month, will not make it economically viable for that segment. But having said that, we don't know what the plans are, and we have, as a company, as an industry, seen many phases of competition and have still managed to do pretty well. When we started in this business, there was one DTH operator, that was ourselves, and then there were two, and then there was six. But we've still managed to keep our position as a market leader. So we would be up to whatever future challenges that come up in this space, and we are very confident in our ability to execute.
Okay, Mr. Venkatesh, before we wrap up, on the results day, when Jawahar Goel spoke to us, he sounded very, very upbeat about FY16, and he mentioned that he believes the 100 crore bottom line number is not out of reckoning for FY16. Is that a distinct possibility?
Well, it's not a policy to give specific guidance on bottom line numbers, but if you look at our last quarter's performance, as well as you look at the way the overall momentum is established in the business, you can certainly extrapolate the kind of deliveries that the company will give. But as I said, it's not a policy to spell out bottom line guidance.
All right, Mr. Venkatesh, we'll leave it at that. Thanks so much for joining in.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.